Earlier today, we wrapped up the last trading day of the year for 2023, and SoFi locked in a 115% gain year to date. And this comes on the same week that we got updated numbers for short interest. If you'll remember, in previous videos, we had record short interest for the year. So let's take a look at what the updated numbers show us. Okay, starting off, this video was a little bit lighter on the news side because it was the last trading week of the year. The stock ended up fairly flat this week, just under 2% gain for the last trading week of the year. Keep in mind that this was a short week because Monday was off due to Christmas. When the market reopened on the 26th, SoFi eventually broke through that $10 psychological wall. It had flirted with that wall a couple of times before, and then I think on Wednesday, it just smashed right through, went straight to 1030, and it rose as high as 1050 before pulling back yesterday and also earlier today. Today we had a red day pretty much across the board because it is the last trading day of the year, and as a result of that, a lot of people, it's their last opportunity for them to take profits and for them to lock in gains, whether it's for tax loss reasons or whether it is just at the end of the year they want to rebalance portfolios. And so obviously we're going to have a red day for SoFi, just as we had for a lot of other players. But keep in mind that this rally for SoFi, for them to break through that $10 psychological level, from a technical perspective, there doesn't seem to be a lot standing in the way of this company going much higher. Obviously, we're going to have psychological levels at 1050, 11, 1150, so on and so forth. But this is important because this rally has been purely on momentum. It's been purely on macro. There's been nothing really that the management has released that has fueled this run up. And so if you look at the strength of this rally and then extrapolate to say, well, what happens when management does release good profitability numbers, or when management does release good news in general that is specific to that company? Where could it go, right? And so, like I said, SoFi finished up a whopping 115% year to date. On December 30th last year, which was the last trading day, they closed off at $4.61, and today they closed off at $9.95, just shy of that $10 mark. Now, in terms of the news, I think the stock price action is one thing that we've talked about ad nauseum, so we can put that aside, only to say that, this rally is fueled and does have legs. It's been sustained and that's been proven, and it's only, in my opinion, going to get stronger as we head into January because, as we know, huge catalyst that's upcoming in January, right? So I'll put that to one side and really talk a little bit about the short interest. This was the major piece of news. This came out on Wednesday, the updated NASDAQ filings for shares sold short as of December 15th. And what we saw was that the short interest is actually down slightly. We peaked at 142 million shares sold short on November 30th. And as of December 15th, 2 weeks later, this number is slightly down to 128 million shares sold short. Now, what you'll notice is that we have higher bases of, we've crossed that 100 million shares sold short threshold, and that's sustained. There's a lot of short sellers on this name. Obviously, as the name gains popularity and as the rally continues, you're going to have a bunch more shorts piling on. But the interesting part to me was that a lot of covering has happened, probably in the losses for the short sellers over the past 2 weeks as the stock has rallied from the $7, $8 range all the way to the $10 range. And so we expect that to continue in January, especially because we're coming closer and closer to that catalyst, and shorts don't really have a lot of runway left to play with regards to, if they want to double down on their positions or if they want to just book a loss because the rally is essentially sustained. Some could still be holding on to the fact that, SoFi could fall back into the 7s and 8s, but I do think that it is forming a solid base of buyers as we head into 2024 because of how assured people are in that profitability announcement and the sustained profitability going forward into 2024. And the reason I say that is because we had some more coverage on SoFi from mainstream finance media. We had Dan Dolev on Mizuho. I think Dan has something like a $15 price target on SoFi. It's one of his top picks. It was one of his top picks, top 3, I think, for 2023. And it remains to be a top pick heading into the new year. Dan was on CNBC talking mostly about Affirm, mostly about the buy now, pay later paradigm. But in the last 30 seconds of the segment, the host asked him what other names he likes, and he said, SoFi is a top position for them, and he expects them to go to $15 per share. That's in line with what his price target is for SoFi.
Ends up being proven
So
wrong.
You're sticking with them for 2024. Who else would you say is in kind of like the top 5?
I'd say top 5, SoFi. SoFi has been another stock that everyone loves to hate. It's funny that you say that because this time a year ago, everyone hated Affirm, and now Affirm's at $50, and it's going up. So I think I'm almost seeing kind of the parallels between them and SoFi. SoFi, I think, is like another one that's going to, we have a $15 price target. I think that once all these fears, evaporate, it's going to go up there.
Similarly, earlier last night on CNBC, we had Malcolm Ethbridge on CNBC talking about SoFi's profitability, talking about a big partnership with, he name dropped Apple, which I thought was really interesting, but basically a big partnership with a player outside of the fintech space to leverage SoFi's bank charter and their banking as a service platform powered by Galileo in general. I think that could be a really interesting partnership that could happen. I don't know if Apple could be the one. I know we've talked about Apple in the past, given the trouble that they've seen with Goldman Sachs in terms of that partnership ending. I don't think SoFi has the proper infrastructure to support such a behemoth. Probably other companies that are smaller than Apple that can partner. Again, I made predictions going into 2024. I know Tanner made his own predictions. We're going to be talking about them a little bit later tonight at the SoFi Weekly podcast. But one of my predictions was that Galileo would see a big partnership by these legacy financial institutions because of the pilot programs that are coming to fruition in terms of that validation that's coming. We know pilot programs have been running now for about a year or more, and it's finally coming time for them to be validated and for them to actually move from the testing phase all the way to the implementation phase with a lot more accounts onboarding onto Galileo. He also mentions Anthony Noto buying up shares under the $7 mark has been inspiring confidence with retail investors. He mentions institutions that are loading up more heavily, and he talks about profitability and coming. So I'll play a segment of this clip right now, and then we can move on and just listen in on this segment and just hear how bullish he is talking about SoFi overall. And really the reason why I'm playing this segment is because this, I feel, is indicative of a lot of the attention that SoFi is going to get in 2024. You're going to see a complete momentum shift in terms of the sentiment as that company hits profitability and guides for sustainable profitability going forward. So you can see how big of an indicator that profitability is and why we keep talking about it, because of how important it is for the company.
Reducing capital reserve requirements, those kind of things. So will allow them to expand quite significantly into places they haven't really been able to just yet.
Here's the other question. We asked you for another pick. You said, I'm sticking with SoFi. What makes you so bullish on SoFi? There's so much competition in the fintech space. Why do you feel like this is one of the best ones?
Yeah, so the big thing about SoFi to me, especially in 2024, is that one of the pieces you mentioned, mortgages, student loans, they offer deposit products, personal loans, things like that. But one of the things that goes under the radar with this name is their banking as a service feature, which basically allows other fintechs and bigger tech companies to white label their banking services. And so I look for a company like Apple, for example, who wants to push further into fintech without having to actually tack on all of the infrastructure required and get all of the permitting and everything else. Somebody like that, maybe not Apple, but somebody like that with a really big name who wants to expand into this space, I see them looking to partner with SoFi in 2024 to get there faster.
All right, so possibly you're seeing a bigger player partnering with SoFi. I'm sure you remember on this show, we used to have an insider buying segment. We don't do it quite as much anymore, but you're actually looking at some insider buys by SoFi CEO Anthony Noto. Why is that important for investors?
For one thing, nothing shows support and nothing shows confidence in a company like the CEO, him or herself, actually purchasing shares of that company personally. And every time this company has dipped below the $7 threshold, I've noticed that Anthony Noto has picked up six-figure lots of shares every single time. So I don't know exactly why just yet, but that $7 mark seems to be a key support level for him personally. So I would keep an eye there as well.
Sounds like all around, you don't see any downsides for this stock. Would you advise people to buy more shares right now or just hold what they have? It doesn't sound like you see any headwinds coming up for SoFi.
Well, it is interesting to me that fintechs are moving up and to the right in the last month. I think SoFi alone is up something like 40% in the last 4 trading weeks. That's a little bit scary to me in the sense that this has been a really tough year for fintech altogether. So I think maybe we wait a little bit, let it cool off. Let the space itself cool off. The name has crossed into the $10 threshold, and I think that's a very important place for them as well, because now it brings it onto the radar of some institutional investors. I think maybe we can wait a little bit, let the stock cool off, but I definitely am planning to buy more shares.
Okay, one last post that I saw with regards to Galileo while we're on that same vein. Andre, who creates content on X, made this post a couple of days ago, and I found it really interesting. He says, a friend sent me this about SoFi and Galileo and Technisys. He says, I'm not a banker, but I've worked in a large financial firms as a programmer for the last 10 years. Galileo is amazing. I've played with the APIs. They're so darn easy to use. Technisys was a great addition, not to mention the top brass thrived through the Great Recession. So basically he's talking about Anthony Noto's tenure here. I've had a ton of confidence in them this entire time. The numbers and moves have always justified my confidence. I couldn't walk away. If they keep most of the leadership structure in place for the next few years, we will see good things. So obviously that's fairly bullish in terms of someone from a technical background validating how easy Galileo is to use as a plug-and-play solution for these legacy institutions. And we know that this is the moat for Galileo all along, right? We know that this is a deep problem that they're solving in the space. We know that the space is ripe for innovation, and we know that the companies that they're dealing with are huge laggards in the space. And so that just is a trifecta of a value proposition that Galileo brings to the table, which makes me more bullish that in the new year they're going to have a validated partnership with these large financial institutions, because there is no clear alternative as to who these financial institutions would pick if not Galileo. Otherwise, they would be forced to build their own in-house solutions. And we come back to problem number one. These companies move very slow, and if they could innovate in-house, they would have done so already. So they have a clear need for Galileo, and that's just validated by this statement here. And I'm really excited to see where Galileo goes moving forward. But like I said, it was a slow news week. We only had effectively 4 trading days, and it was the last week of the year. And the short interest was definitely the more interesting piece to note. In a couple of weeks, we'll probably find out what the short interest is to end off the year. I wouldn't be surprised if this number keeps falling as we go into profitability. I would hope it keeps falling, because if shorts keep doubling down on SoFi, then it might get pretty ugly pretty quickly, given the profitability announcement that we are all tracking towards for the last quarter of 2023, which SoFi is expected to report in the end of January. Like I said, I did full predictions for 2024. Tanner did full predictions for 2024. Our entire SoFi Weekly podcast episode later tonight is going to be a predictions episode. I just wanted to hop on and just keep with the continuity of SoFi news for the end of the year, and looking forward to the next year of covering SoFi. If you are new to the channel, and for whatever reason this is the first video that you're seeing with regards to SoFi, subscribe for more. Follow on X, and you can stay in touch with all the piece of news, rumors, stock price movements around the stock. I do these videos weekly. For right now, this is the Fundamentals Investing Podcast. Thank you so much for listening, and I'll see you later tonight.